Hey, Market Chameleons, thanks for hanging on there on YouTube Live. If you don't realize it, we start the YouTube Live about 10 minutes before the show starts. Hey, Market Chameleons, thanks for hanging on there on YouTube Live. If you don't that's some reverb. Yeah, that was exciting. But anyways, we get started on YouTube Live about 10 minutes before the show starts, kind of get ready, get people chatting. There wasn't a lot of chatting today, but Jesus, that keeps kicking on. I'm not sure why that is. All right. Everyone's on. They can hear us. If the screen's fuzzy, I'm going to put out a link. This gets you into our Zoom meeting. You can chat in there as well if you're seeing a screen that's a little fuzzy. With that, good morning, Dmitry.
Good morning, Will. How are you? And good morning, everyone. So before we start, Will, should we just really quickly put up the disclaimers? Usual, get that out of the way, and then we'll just kind of jump into what's going on in the markets this morning.
Yep. There you go, buddy.
Put that in there. Right now. All right. Yep. So keep in mind, everybody, Market Chameleon, Will and I, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. If you need professional advice, then you should go and seek out either a registered investment advisor or call your broker. There's the disclaimer, everybody.
Awesome.
Get that out of the way. So now let's just jump back to my screen here. And, you know, as usual, we're just going to start out with what's moving in the pre-market hours. Then we'll go talk about some earnings. I might do like a seasonality screen today. Take some questions, and if we have a little bit of time, I might also just show from an options perspective how to look up implied volatility movers. So if you guys if it's the first time you're joining us, welcome. And this is the pre-market report here, and what this is just stocks that are moving in the pre-markets, and we have the most active stocks, the largest percentage gainers, largest percentage decliners. And usually what I do is just like kind of go to the top of the list and do a quick analysis of the price history, price action history. And actually before that, let's just look really quickly at what came out with earnings today and what's going on. So we see here's Pinterest, that's up 33%. They reported earnings. Let me close that. We'll come back to that. Apple Computer, that's up 7% in the morning. Facebook up 6.9%. Ford reported that's up 3.1%. So you could kind of see like some of the names that have been reporting earnings. Some of the biggest gainers over here. See Amazon up 6.1%. Some of the losers are in here. So I see, I think Shake Shack, Expedia, CVX. And we'll get more into the earnings a little bit later. I'm gonna uncheck this. And one thing that I did notice, so here we're seeing some smaller cap stocks making really high moves. This is up 79% in the morning. This is up 101% on 8.7 million shares. This one's up 79% on 7.9 million shares in pre-market. And at least for the last week or so, you know, one of the things I've seen is some of this news is kind of related to COVID, you know, so anytime you see some kind of news in these small cap stocks that have something to do with COVID or some kind of a device or vaccine, whatever it is, we see a lot of excitement in there. So this is one here. Let's just look at this one really quick.
Hey, D, while you're on the pre-market, can you answer this question to one of our chameleons?
Sure.
Mike is asking, do the pre-market lists dynamically update or they need to be refreshed?
So they'll be refreshed. None of this is dynamic. It's not update. The screen will not update for you. You'll need to refresh. You'll need to refresh the screen.
There you go, guys. Refresh.
Yep. All right. And so anyway, then we go to this one. I'm just going to bring it up here and just take a look at what's going on. Here's the catalyst news over here. Down here, we see it for the VWAP, 2.7 million shares traded between 297, 309. That's the biggest bar over here. Right now, it's trading 273. That's 77% above yesterday's closing price. Here's the 52-week range, 32 cents, $5.64. This has traded already 8 million shares in just in a pre-market, and that's compared to a float of 29 million. So you could see there's a lot of volume in that stock. Let's just take a quick look. Again, I didn't really read the news. I'm not interpreting that news. So I'm leaving that up to the trader. But let's just take a look historically what this stock tended to do after a big gap move at the open. What did the price action look like? So here in the last 3 years, these are the biggest gap moves at the open. So we see on average, the average was 38.8%. Some of them were, also with press releases. So these are some of the catalysts here, the historical catalysts. You see here, there was a time 263% it was up, 74%. So it's seen some pretty big moves, even similar to today's move, 77%. After the open, these are the 12 biggest gap moves in the last 3 years. After the open, we see from the open to the high of the day, that's averaged 39%. From the open to the low of the day, it's averaged 16%. From the open to the close, the drift for the entire day, 67% of the time it drifted lower, 33% higher, but the average return of involvement was 5.4%. So you could see here, like even in this gapped up 14.5%. Then it continued rallying, for another 161% to the end of the day, and it's gone up as much as 400% to the high of the day on March 30th. So you could kind of just see what that news was before.
Hey, D, some of the chameleons were asking how you flip. They're really interested in the page you're on right now, how you got to that page. And
so when you're on that pre-market report, what I did was I just clicked on this ECOR, anywhere on there. It pops open this page, and then I just went to the gap up history. So some of these features are for premium users. Some of them, so there's a mix. Some are for premium users. Some are for just for the general public. So you're not going to get to see as much as I'm going through here, but you'll see this report and some of these up top. Anyway,
cool. Thank you.
Yeah. So this is the gap price action history for this particular stock, from a big gap up to the upside. The other one, let's see, this is another one that just also COVID. For some reason, this has been popping up a couple of times. I keep thinking it's Tesla, but it's not. It's it just looks similar in the.
Let me ask you something. Did you think when they created that acronym for that stock, they were thinking, "Wow, will people get us confused with Tesla?"
Yeah, you might. Yeah, exactly. While you're inputting the stock price, the symbol, you might just get a.
Oh my God! I was like, Tesla's at $6 before.
Yeah, exactly. I was like, yeah, up 35%. So, but yeah, and that's happened to me before, because this one actually made the pre-market movers a couple times. And when I looked at it, I'm like, what's going on here? Why is it $6? Another one, let's take a look at. So Pinterest, that one just reported earnings. Let's take a look at that one from an earnings perspective. So this is up 32% in the pre-market hours on 5.9 million shares. We see here the longest VWAP bar here traded 1.7 million between 31.57, 32.31. This is the pre-market range already, 25.20 to 34.75. You could read the news down here. Let's look from an earnings perspective what it tended to do. So here, actually, it's not even been around that long, right? Because I only got 1, 2, 3, 4, 5, 6 observations. So not that many observations here, but here we see that at least from an absolute percentage move, it tended to gap up a lot, right? It's gotten big moves. The average move in the morning up or down has been 17.1%. as high as 21.9% over here down on October 31st. So here, you know, it's like really, this is a pretty big move. It tended to, from the open to the close, 80% of the time, again, this is a small sample, it's increased for an average of 1.4%. This is how it tended to come after earnings, 1 day, 2 day, 3 day after. It looks like it got a little bit weaker coming out of earnings. So going into earnings, looks like it had historical run-ups. Coming out after earnings, it looks like it weakened, at least in those observations that we're seeing here. The other thing before I move on from here,
while you're on this and you can look up gap up and gap down, someone's asking about Apple. How has it reacted when it's had big gaps?
For Apple, okay, let's take
I don't know if you saw yesterday, but in the earnings report, they're splitting that stock 4-for-1.
Yeah. So they had even extra move. So we see right now it's up 6%. Let's take a look at Apple then. So here's Apple. It's traded between 407 and 413.97 in pre-market hours, 1.3 million shares. Here's the top VWAP bars between looks like 412, 72, 413, 25. Let's look at earnings perspectives. So this is historically 73% of the time in the morning it gapped up historically prior to earnings. After the open, the average move from the open to the high has been 1.7%, open to the low, negative 1.7%, even there. It's split by the end of the day, 55% of the time it was higher, 45% lower, for an average loss of 0.1%. Here we see that historically, even what are we up, 6.6%. So the average of the historical gap moves up have been 3.5% with a high of 5.7. So this one really, went through. And we were talking about it, actually, you mentioned it yesterday, Will, how that the straddles seem pretty cheaply priced compared to like historical averages. We looked at that, remember, yesterday?
Yeah, it was all four of them. And they seemed
Facebook, Apple.
They seemed priced right at their historical average, which seemed odd since they've had such a big run up. That, I mean, it seems like there's so much volatility in these, even to the upside, that they could go up real fast and hard and down, and they were being priced at average. So
exactly.
So something to look at, that was for sure.
Yeah, and here this is kind of coming out. Looks like as far as win rate, looks like 2 days after earnings, it's increased 73% of the time. So it looks a little bit stronger coming out the day after earnings. That on average it added to gains coming out of earnings. So that's Apple really quickly from a price action analysis.
Awesome.
Let's take a look at this. Let's take a look at, I'm going to look up gap up movers. So these are looking at the last 2 weeks. These are stocks that gapped up in the morning. And we look at from a perspective, what did they tend to do by 10 a.m. for, that first half hour, because you usually see a lot of activity right in the first half hour at the open. And then we look at what tended to happen by the end of the day, from the open to the end of the day. So we see here, this is all the stocks here. This will be like kind of our benchmark group of by 10 a.m., 49% of them were higher, 50% of them were lower. Some of them were unchanged. That's for an average loss of negative 0.1%. From the open to the close, 47% of them increased, 53% of them declined, for an average of negative 2.2% loss. So let's see what if we just filtered out S&P 500 stocks that reported earnings. Let's see how those did, right? So what about, the things that are included in the S&P 500? So that's what I'm going to do now. So these are S&P 500 stocks. So you could see they tended to do a little bit better. This was up 51% of the time by 10 a.m. And by the close, 52% of them were higher by the end of the day. If we just looked at S&P 500 stocks, that's compared to 47% and 49% if we took all the stocks. Let's add maybe, what about S&P 500 stocks that gapped up more than 5%? So there we go. So the ones that actually gapped up more than 5% tended to do better by the end of the day. So 74% of those actually continue to increase after the open for an average gain of 3%. And that's looking at, 35 observations over here. So S&P 500 stocks who saw gap up of 5% or more, 74% of those continued by the end of the day were higher, 26% were lower, average gain of 3%. Let's just add, what about if they reported earnings, if that improves? So that, that went down a little bit, but still S&P 500 stocks that reported earnings gapped up more than 5%, 69% of those by the end of the day continued higher for an average gain of 1.5%, but that first half hour, those kind of declined by 10 a.m., but it looks like then they pick back up by the end of the close. So that's just really quickly, we do different types of analysis. So this one, we're just going to we looked at S&P 500 today. Let's turn to what's coming up. What earnings are coming up in the next 2 weeks. So I'm going to go here to the full report. So let's filter out stocks that trade at least at least 5,000 option contracts or more per day. All right, because we're going to look at it from a perspective of implied moves. Let's look at market cap stocks. I don't know, let's look at least over 5 billion for now. See what comes up. So we see here HSBC is coming out August 3rd before the market opens. So that's right now expecting 4.4% move either up or down in either direction. That compares to a 4-quarter average move, actual move of 3.2%, and a 12-quarter average move of 2.7%. So you can see it's about 1.1% over the 4-quarter average, 1.6% over the 12-quarter average. The high move in the last 12 quarters was 5.6% as an earnings reaction. Which other one? Here's Wins expecting August 4th. That's that casino that's expecting 9.1% move in either direction. That compares to 2.5% actual 4-quarter average move and 4.6% 12-quarter average move with a high move of 13.1% in the last 12 quarters. Again, those casinos, I don't know, did they start opening up? I think they started opening up actually, right?
Well, they have, yep. Limited social distancing. I think there are only like 3 players per table. They've done a nice job, and people have gone.
Yeah, so so they're like kind of like back in operation, not full capacity, but they have been opening up. I don't think like the cruise lines are yet, but casinos look like they've been back up. Here's Beyond Meat. That's expected to open to report August 4th after the market close. That's expecting right now up or down move 14.5%. That compares to 4-quarter average move of 19% absolute average move, 12 quarters average of 23.1% with a high move of 39.3% in the last 12 quarters. So you could see here, this one is right now estimating a little bit under their, 4.5% under their 4-quarter average, 8.6% under their 12-quarter average move. Disney, that's another big one. That's coming out August 4th. Disney also, did they open up Disney?
They are open, yes.
They are open? Okay.
People are limited tickets, and you have to have a mask throughout the resort, but they
the entire time?
Yeah.
Okay. Okay, yeah. I just remember when we took the kids to Disney, I just remember everywhere was a line. So I don't know how they're going to manage that, but everywhere we went, there was a big line. But anyway, they're expecting up or down 5.4% right now, according to yesterday's closing straddle. That compares to a 4-quarter average of 2.8% and a 12-quarter actual average of 2.2%. So you see that's 2.6% over the 4-quarter average, 3.2% over the 12-quarter average, with a high move of 4.9% in the last 12 quarters. So that's kind of really quickly going. Oh, Wayfair, here's another one. So Wayfair, that's expecting August 5th before the market opens. That's right now looking like a, we still have some days to go, but as of yesterday's close, that straddle was pricing an implied move of 20.6% in either direction, up or down. That compares to a 4-quarter average move of 13.4% and a 12-quarter actual average move of 13.9%. So we see that's 7.2% over the 4-quarter average, 6.6% over the 12-quarter average. High move last 12 quarters, 27.9%.
Where is that stock trading relative to its like, has it had a run up during this whole 6 month? Yeah.
Yeah, let's go take a look at it, because I know that they have been rallying. A lot of these e-commerce, like a lot of these internet based
yeah, people are sitting at home and
have been doing really well. So you could see here it's like 260, right? It's already pre-market, it's above its 52-week high. This is its 52-week range, 2170, 240, 243. So there you go. It's like, pretty, it's on at the 52-week high right now. Actually, as we're on here, we could even take a look. This is how it behaved previous quarters. So these bars here, that was the expected move according to the option straddle. So the up or down. So you could see here the previous quarter, the options were anticipating up or down 15.9% move. It actually, after earnings, it moved up 23.7%. So that broke through the implied straddle. Here we have a couple of them. It broke down to the downside, and so at least here from looking at it, when it broke up to the upside, like, it was pretty significant, right? Like there's a 22% loser over here. So it did move, right? It did have some big moves over here historically. So it's been volatile after the earnings have been released. Let me just take a look real quick. The implied volatility. So this is on a 30-day constant maturity in Wayfair. So here we see that the 30-day constant maturity, or options expiring 30 days, not the near term 30 days out. The average implied volatility prior to earnings was 77.5%, day after 54.4%. The average decline in implied volatility day after earnings has been 31%. It looks like 5 days later, the average has been 51.7%. So continued to decline a little bit a week after, from the day after earnings, it declined a little bit more, 1 week after. So that's just quick overview of Wayfair. Let me show you one thing. If you have questions, I'll take them. If not, I'm going to go to a seasonality.
They're one of our longest running and best chameleons, Brian Bolin, was asking about Amazon. He was asking, this was very early, who likes a move over 32.75 in the stock. I just wondered what the options were telling us about that 32.75 strike.
So over here in Amazon?
Yeah.
This one? Okay. So is that, I need to take a look. He's just looking at the options chain.
Well, he was asking the chameleons, and there were a bunch of responses. It's just an interesting question. He wasn't asking it for the options. I'm bringing
right.
it up.
32.75. Like
he likes the stock trading to that marker. I'm just wondering what the options community is saying.
Right. Okay. Yeah. So that's we'll see how that goes. Like right now, it's up 5.5%, 32.20 pre-market hours. We'll see how it does after the open. But let's just take a look real quick. I'm just going to go to here, and this is just telling us, what the expected move was for each of these expirations. So we see July 31st, that's expiring today. those option prices, you know, we're expecting a 5.1% move in either direction, or, you know, $155.96 move up or down. It's up already 168, 5.5%. So it's, if it opens there, that breaks through the implied move. If you're going out a little bit further, you know, this is what the implied moves are. Let me do really quickly. Well, do you have other questions?
No, that's perfect. That's perfect. Awesome. Thank you.
Yep. Let's do really quickly a seasonality screener, because we're already at the end of the month. July's ending. Let's see. In the month of August, let's look for stocks that tended to do well in the month of August. So what I'm going to do here is, let's look for stocks that I'm going to put calendar month August. Let's look for, you know, at least 8 years of observations, that stocks that tended to increase from, you know, from August 1st to the end of August, historically, those calendar days, at least 70% of the time or more. I'm going to look for maybe higher market cap stocks. So let's try like 50 billion or higher for now. And let's look for average returns. Let's see if we could get 2.5% for the average returns. So here's like a small list of stocks, you know, narrowed it down. You know, the ones that we see, well, gold's up there, so that's interesting. 80% of the time in the month of August, gold has increased for an average gain of 3.9%. This is its best performance in the month of August in the last 10 years. Its worst, 12.3%. Its worst has been negative 3.3%. Here's Netflix. Netflix, you know, month of August, it's been a good month historically. 70% of the time it's increased for an average gain of 4.8%. Best return 22.4%. Last 10 years, worst return negative 11.6%. NVIDIA made the list. That's been up 80% of the time in the calendar month of August for an average gain of 5.3%. The best return in the last 10 years, month of August, was 14.6% versus a worst return of negative 3.8%. That's really quickly, just because we're already at the end of the month, we might as well take a look at that. Do you have it? If you have questions, I'll take them. I could show one more screen.
Well, we have a question about Exxon.
Okay.
Now this, and I'm not sure. I mean, you'd have to answer this. Arvid was asking about the money flow into a stock, but he was asking about Exxon earnings and how much equity or capital was flowing into the stock. We have information on the options. Is there anything that shows the money flow into the stock that you could recommend to
I could take a look. I just see here from the options, you know, that's what it came out, that there was a shift from bullish to bearishness. That's just comparing call purchases, straight call purchases versus put purchases. So that's how that came out. I don't see any kind of like big money stock flow in either direction, so there was no like indication there. Let me take a look here. You know what we could do? Let's see if on the stock order imbalance, let's see if there's any unusual like order imbalances in XOM. So
did everyone see how he did that? He typed in the upper left-hand corner, it says historical imbalance. He typed in the symbol, and that broke it down to XOM if you didn't see that.
Yeah, so here I see like kind of a mixed bag. You know, there's buy and close imbalance, sell and close imbalance, buy, sell. You know, so this is kind of how it looked. July 30th, there was a buy imbalance at the end of the day, 691,000 shares. July 29th, sell imbalance, July 25th. So kind of like a mixed bag there. You know, that's nothing like clear to me. I'll take a look at this. Let's look at the, this screen's blocking me. Let's look at the big money stock flow and see what happened yesterday in Exxon. So here it just looked like it was pretty balanced to me. So these are large block trades, right? So these are trades that are either 10,000 shares or more, or a notional value of at least 250,000 shares or more in one trade. So the idea there is we're looking more for either professional or institutional trades, because not many retail investors, would trade that size, that big. So these are looking at big block trades, and I just see here that, on the support side, there's like 10 trades total, 99 million shares for VWAP of 4187. On the resistance side, there's 179 trades total versus 80. I mean, again, this, we're not seeing any indicators, so nothing here that I would say stands out. So it looks like kind of fairly balanced right now. Yeah, so I can't, so nothing that I see, at least, nothing that sticks out in ExxonMobil unusual. This is kind of what you usually see.
We have he's very thankful of that explanation, by the way. Arvin.
Oh, okay, good.
I've never seen Arvin.
Thank you for the question.
Thanks for joining us, buddy.
Yep.
We did have a question about Kodak. We might as well look at it. Jake answered it on the chat. I'm wondering your thoughts on Kodak. The person's asking about the volatility, and he thinks the volatility is going to come in, which a lot of people may, but is there any way even to play it? I didn't even think, I looked at the options chain a couple days ago, and there weren't even many strikes. Is there any way to play?
Yeah, they probably had to add a bunch of strikes every day.
I would have thought,
because it was a crazy move, right? So here, here it is today. Yesterday was down 10%. Today it's down 13% in the pre-market hours. Of course, like this is the implied volatility 286. It's down 25 clicks from the previous day. So this is like, just really quickly, the observation I'm seeing is that it's going to be very hard to borrow. So there's more people trying to play from the short side right now than from the long side, or in any case, the people who want to play from the short side have difficulty borrowing it. So the way because you see here, these theos are all green, these are red, meaning that the calls relative to the puts are priced cheaper relative to the puts. Puts are priced higher relative to the calls. So if you try to put like a synthetic short on, you're going to pay some kind of a fee, right? And so that's one of,
it's probably an exorbitant fee.
Yeah, like, well, we could take like, so where did it close here? Like $30, right? So just to put on, sorry, so this is where it closed, like near $30. So if you're looking just at the 30 strike over here, if you bought this, call for 520, sold the put for 620, you have a synthetic long on like this. So this acts like stock, right? That's your synthetic long, but you get a credit for that because the other side wants to be short. So basically you're getting a credit of $1. So they're willing to give you $1 just to get short, right? They're saying, I'll give you $1 so I could short it synthetically, at 29, even though the stock's like 29.83. So that's the fee that's baked in, and that's till August 7th. So 6 days. So you could see, at least yesterday, that's how the options were lined up. If you're playing it from the short side, whoever's playing it from the short side, they're willing to pay a big fee to get short. Let's see, look, 304. So, I mean, they're expecting big moves. Let's take a look. So here, August 7th, the straddle went out, expecting 38% move up or down by expiration. August 14th, 49%, almost 50% move in either direction. So even August 21st, which is the next month, that's 56% move in either direction, $16, $16.48 from yesterday's close. So very richly priced, premium in Kodak.
Yeah, Jake is saying on the chat that he's been trying for days to get a credit spread off, no bites, which is interesting.
Right. So it could be. Let me just take a look. Is it because because the markets are wide? Because they don't look that wide to me. over here, unless you're
I don't know,
just
Jake.
far away from the market.
Why do you think you're not getting executed?
The markets don't look, unless you're just the price is far away from the market at the time. But look, it's moved. It definitely looks like it moves around a lot. Let's just take a look at, actually, let's just look at the chart, right? Let's see how that looks like for one day. So kind of like, see, it's like wobbly, and then just kind of continue lower.
So Jake's trying to put it at the he's not willing to give up any toll to get in. And
yeah.
He's putting it out in between the markets. He says during the day, the markets are reasonably wide and nothing's coming. He's going to have to give up some statistical edge is what he's saying. Just FYI.
To do, okay. You're right. So it's interesting. But yeah, look at 300,000 contracts traded hands yesterday. So a lot is trading in there. You would think you'd be able to get hit in between the markets and something like that, especially with a lot of volume. But, we'll see. All right, I think we're coming to a close unless you have like a really quick question.
Yeah, no, we've got only a couple minutes left. Hey, everyone, thanks for joining us. Remember, I forgot to remind you, please subscribe to the channel. You'll get all the alerts. Videos are coming out. I did post. We're having a webinar, do you remember, with Mr. Silver, Chris Marcus, on Monday. I did post that link to register for that webinar. That's Monday at 6 p.m. Eastern time.
And if you have any questions about silver or gold, that's the person to ask, right? Because he's very concentrated in that space.
Yeah, no, if you haven't had a chance, go to his Arcadia Economics, his YouTube channel. He's interviewed just about every gold and silver bugs. I mean, he's interviewed Fed bankers. I mean, he's really got an amazing list of people he's interviewed, and he's got a really interesting story to tell about silver. And we'll go over it again because he still thinks of some ideas out there for you silver traders. So we'll interview him on Monday. Other than that, we got 3, and we should probably be shutting down. Any last comments?
Yeah. No, everybody have a good trading day. Thank you very much for joining us. We really appreciated all the questions. You guys liking us, really appreciate it. And we'll see you guys on Monday.
All right. Have a safe trading Friday, everyone. We'll see you Monday. Have a great weekend. Bye.
Bye.